Welcome to the deep dive. We're jumping straight into Amkor Technology's Q3 2025 results today. We'll hit the key numbers, the guidance, and that interesting news about leadership changes. Okay, let's start with the Q3 scoreboard. Big headlines. Net sales came in at $1.99 billion. That's what, a 31% jump from Q2?
Huge. Yeah, a really significant sequential increase.
Yeah.
Very strong top line.
And the earnings. Diluted EPS was 0.51. Net income, $127 million. Seems pretty solid.
Absolutely solid. And what's really important there is the profitability behind that revenue surge.
Sure.
Gross profit hit $284 million. That's a 14.3% margin.
Okay, 14.3. And looking at maybe non-GAAP figures like EBITDA, how did that look?
Even better, actually. Non-GAAP EBITDA was $340 million. So the margin there is 17.1%. That really shows the core operational strength, stripping out some of those big capital costs typical in this industry.
Right, because this is a capital-heavy business. So how's the balance sheet holding up with all this?
It looks quite robust. They've got $3.2 billion in total liquidity.
Okay.
And within that, cash and short-term investments are sitting at $2.1 billion.
And debt.
Total debt is $1.8 billion. But the key ratio, debt to trailing EBITDA, is only 1.7x. Very manageable.
That seems pretty conservative for this sector. Gives them room to maneuver.
Exactly. It gives them plenty of capacity for future investments, future CapEx.
And I saw something about them paying down debt early.
Yes, that's right. In October, they actually redeemed the last $400 million of their senior notes due in 2027.
2 years early.
Yeah, paying it off early. It signals confidence in their cash flow, de-risking the balance sheet, even while they're planning aggressive growth.
Okay, great context. So phenomenal quarter financially. Let's dig into the why. What drove that huge 31% sequential growth?
It really comes down to advanced packaging. That's the story.
Record revenue there, I believe?
Record revenue, yes.
Yeah.
Advanced products brought in $1.68 billion. It's just dwarfing their mainstream stuff now. They're capturing the high-value, technically tricky part of the market.
And that's reflected in the end markets too, right? Records and communications and computing.
Correct. Let's start with communications, because that jump was, well, staggering.
How big was it?
Revenue up 67% sequentially.
Wow, 67%. What fueled that?
They were pretty clear it was mainly the iOS ecosystem ramp, the big mobile launch cycle. That segment alone is now 51% of their total revenue for Q3.
51%. Okay, that immediately makes you think about concentration risk, doesn't it? So much tied to one player's seasonal cycle.
It does. I mean, it's a huge strength right now being a key supplier in that ecosystem. But yeah, introduces volatility. What might mitigate that somewhat is they also mentioned working on packaging for AI edge devices within communications.
Oh, okay. So beyond just the phone volume, looking at on-device AI, that's a longer-term play.
Exactly. Potentially more sustainable growth there.
Makes sense. All right, let's shift gears to computing. Also hit a record.
Yep. Computing was up 12% sequentially.
Driven by
AI and high-performance computing, HPC, data centers, advanced chips, that whole area, they're right in the thick of it.
And they specifically mentioned something about high-density fan-out, HDFO. Why is that important for AI and HPC?
Right, HDFO. It's all about speed and density. High-density fan-out lets them package chips much closer together, shorter connections. When you're dealing with massive AI chips, GPUs, you need incredibly fast communication between the processor and memory. HDFO enables that.
So it's basically essential tech for the high-end stuff.
It's pretty much a prerequisite for leading in AI hardware packaging.
Yeah, okay. And the last segment, automotive and industrial.
Steady growth there, up 5% sequentially.
What's the driver in automotive?
Mostly advanced packaging again, but for ADS, advanced driver assistance systems, think sensors, vision systems.
Autonomous driving tech.
Right. Plus, they noted some improvement in demand from the mainstream industrial side, too. So pretty diverse portfolio, really, focused on these big growth areas.
Okay, so summing up Q3, fantastic execution, strong growth across key future-facing markets, but the market looks ahead.
Always.
And the Q4 guidance seemed to temper expectations a bit.
It did. And that definitely caught the market's attention. They guided Q4 sales between $1.775 billion and $1.875 billion.
Which is down sequentially from that $1.99 billion in Q3.
Exactly. And EPS guidance is also lower, $0 to 38 cents to 48 cents.
And didn't the gross margin guidance have a little asterisk next to it?
Yeah, good catch. The 14.0% to 15.0% guidance includes about a $30 million benefit from some asset sales.
So the underlying operational margin is actually a bit softer,
Right. So investors weren't just looking at the year-over-year number for Q4, which is still projected to be up strongly, around 12%.
which is good.
It is good,
Yeah.
but the market often reacts more to that sequential change, that dip from Q3.
And the stock reaction reflected that.
It did. It was down about 5% in after hours, trading right after the announcement.
So the market may be focusing on that seasonal dip after the big iOS ramp more than the year-over-year strength.
That seems likely, weighing that near-term deceleration.
But even with that softer near-term outlook, Amkor seems to be really leaning into investment, right? They boosted their CapEx forecast.
Massively. They upped the full year 2025 capital expenditure forecast to around $950 million.
Wow, nearly $1 billion. That's a huge commitment.
It's incredibly aggressive. This isn't just maintenance spending. It's funding the next waves of advanced packaging capacity, especially for AI and HPC demands.
And a big piece of that puzzle is the new Arizona facility they broke ground on.
That's the centerpiece, really, the new advanced packaging and test campus in Arizona.
What's the strategic thinking behind building that in the U.S.?
It's a major long-term move. The goal is to enable a complete end-to-end semiconductor supply chain within the U.S., from wafer foundry through packaging and test.
So onshoring, essentially.
Right. It strengthens their global manufacturing footprint. They have Asia, Europe, now a major U.S. presence. It aligns with government initiatives, gets them closer to key customers building fabs there. It's about future-proofing.
A decade-long vision, maybe?
Definitely seems that way.
Okay, so huge investments, strategic positioning, and then there was the other big piece of news tucked into the announcement, leadership.
Yeah, the CEO transition. Giel Rutten announced he plans to retire as president and CEO at the end of 2025.
He's staying on the board, though.
He is, yes. Which suggests, a smooth, planned transition, not abrupt.
And who's stepping into the role?
Kevin Engel, he's the current chief operating officer. He takes over as president and CEO on January 1st, 2026.
An internal promotion.
Yeah.
COO to CEO. What does that signal? Continuity.
Seems like it. Engel's been with Amkor for over 20 years, so he knows the business inside out.
And Rutten's legacy, what did he achieve during his tenure?
The narrative is really about transformation. He's credited with pivoting Amkor decisively towards leadership in advanced packaging, really orienting the company towards these high-growth areas like HPC and AI that we've been talking about, setting the stage for this next phase.
So Engel inherits that strategy, that big investment plan.
Exactly. He's inheriting that high-stakes blueprint focused on winning in AI and HPC packaging long-term.
Okay, so let's try to wrap this all up. We had a record-smashing Q3, really driven by advanced packaging, especially that huge iOS ramp, followed by Q4 guidance that looks, well, sequentially softer, which seemed to worry the market a bit in the short term. But layered on top of that is this massive, almost billion-dollar CapEx commitment, the huge Arizona project aimed at the long term,
Yeah.
and a planned CEO transition designed for continuity. It's quite a mix.
It really is. And it leaves you, the listener, with a pretty interesting question to think about. You have this huge commitment, $950 million CapEx, the Arizona campus, all targeting long-term dominance in AI and HPC, massive future bets.
Yeah.
So how do you weigh that against the short-term sequential softness shown in the Q4 guidance? Where do you put the emphasis? That's the real strategic tension here.
Short-term caution versus long-term ambition. Definitely something to mull over.
Okay.
Thanks for breaking all that down for us today.
My pleasure. Lots to unpack there.
Indeed. A complex picture.